Okay, so late evening, almost ready to end my day, but I was going through in my office some of the replies, and I got a request from Spency6 regarding BNB, and I was thinking, I remember that. And then I remember having some good vibes about it. And so I figured might as well jump on it now and post it. And I'm glad I did because as you can see here, I believe it's quite bullish. So if you look at this from the Elliott wave counting, let's say, well, I'm sorry. Let's go to the pattern first. So those of you who are not new to my blog, you know that the cup and handle pattern is very bullish. And that's pretty much what you're seeing here. It's not the most perfect. It's got some jagged edges, but its contour fits pretty well. In fact, I can't change it now. It should rise up a little more here and connect the bottoms. The cup and handle pattern is basically two patterns combined. One is called a rounding bottom, as you can tell here. And the second part is called a handle. But this handle is really what's called a flag. And throughout my many analysis videos, even I think a couple today, flag is basically two parallel lines between which prices bounce around, just like here. And if it's pointing downwards, it's bullish. If it's pointing upwards, it's usually bearish. So it's got a bullish flag combined with a rounding bottom. And this pattern is almost like double the whammy. Two bullish patterns combined. Now, before going into here, let's go back to the beginning here and start Elliott wave counting. So Spencer, I don't know how long you've read my blogs, but I use Elliott wave analysis and combine that with chart pattern recognition. And usually in TradeView, I also would use MACD. But this BNB does not show up in TradingView charting, so it's okay. I counted 5 waves here, and these 5 waves represent a motive. Every 5 waves are then followed by a 3-wave retracement. And let me tell you, cryptos are well known for this horrendous, long, drawn out. I mean, it took, time-wise, it took not even a month or so, let's say, to finish 5 waves. But it's taking 2-3 times that to do the requisite 3-wave correction, the ABC correction. It is slow as molasses sometimes. I mean, you should take a look at how ZEC, about a year ago, actually around February or March of this year, was just so slow before it surged and exploded upwards. So it's really not that too different here. So 5 waves, A, B, C retracement, 3 waves, A, B, C. And we can get into a little more details on how these are counted when I put out some instruction-based Elliott wave counting videos, possibly in a week or so. But after 5 waves, you get 3-wave retrace, and this retrace was really deep. Usually it retraces, I forgot to add number. wave number 4 here. Usually it retraces to wave 4. Okay, and in this case it retraced way past even 2. Usually when wave 5 is extended, you can get this kind of very deep but more sharper retraces. But again, cryptos has a different personality compared to equities. Those of Elliottians who are so used to counting Elliott waves in stocks and bonds and maybe commodities, they try to treat crypto Elliott wave nuances in exactly the same way, and they find out it isn't exactly the same way, and that's what I found out. And one of the tendency of the correction of cryptos is very long and lethargic and drawn out. It didn't even end technically. It's going here this way too. But if I counted this as an ABC, the lowest point, and then I count 1, 2, 3, 4, 5. So 5 is done. And then after 5 is what happens? You get another ABC. So that's what formed a handle. So if 5 is done, ABC is done, then there's a trend change, or the resumption of the original trend here. Now these 5 waves themselves become subwaves to a wave of a higher degree of trend. And that means so here is wave 1 of a higher degree. Let's call it the minor degree. And this we'll call it minuet degree. These 5 waves become subwaves to this one. This ABC becomes subwaves to this wave 2, like this. Okay. Then that means we have to have a wave 3 coming on here soon. So if that's wave 3, then this must be wave 1 and 2 of 3. 1, 2, 3, 4, 5 becomes wave 1, ABC, 2, 3, 4, 5. And if that's the case, if ABC is done and it broke out of the handle here, the price breached it, there's a chance they could dip one more time, smaller chance. But it is not required because it decisively already breached outside of the top resistance line. So that means we should be seeing another impulsive wave of 1, 2, 3, 4, 5, which I didn't draw in because I have to draw in every number on this is PowerPoint manually. But it'll look like this over here. And this is very interesting because then that means the target, the minimum target is going to be above with the prior peak, highest peak. So in my opinion, prices, first target will probably be somewhere in the 320s, then 440 and $8. That's how I see it. But this is very, very bullish. So how would one make an entrance? The way I would do it is I would ladder my entry in. Not just if, let's say you want to buy 1,000 coins. I wouldn't buy everything all at once. Maybe I'd buy 100 here. Just in case there's a dip, I do another 100 here, 100 and maybe 30 here, 200 over here. You want to spread it out. And that's what I call the laddering technique. The reason why you want to ladder is because if you buy everything at one point and the price keeps going down, let's say, which quite often it does, you get what's called a buyer's remorse. And psychologically and emotionally, that's not fun. Whereby, by scaling it in, by laddering and distributing your buys above and below your first entry point, you are de-risking yourself away from experiencing that unpleasant feeling of buyer's remorse. And that is the most important technique I've learned, to de-risk yourself away from that. Because fear and greed are the two emotions that'll always get you into trouble and cause you to buy high and sell low. Okay? So, really nice coin. Very good pattern. Perfect counts. Very textbook. Let's see what happens.